All right, so we accrued for Irene's paycheck. Now we need to accrue for Tim's payroll for the week. So in this case, remember Tim? Tim's our bartista. He earns a salary earnings of $1,500 per paycheck. If it's been 1 week since he worked, since the last time we paid him, right? They're on the same pay schedule. That means he's going to earn at least half his check now, right?
Right.
So in this case, right, Mr. Tim Harrison, right, if he earns $1,500, excuse me, one more. Okay, if he earns $1,500, that means when we accrue for him, we need to accrue half the paycheck. So therefore, excuse me, half of 1,500 is 750, and it's going to be exactly like Irene. Excuse me, salaries and wages expense and salaries and wages payable. Okay, but this time it's for $750. And it's going to be on page 25. So 750. Okay, only difference here is we need to write that we're accruing for Tim. For Tim's earnings, not Irene's earnings. Okay. So, once again, plug your numbers into your ledger here. Okay. I'm already on my liabilities, so I can just go ahead and just pop that in first. And I'm going to write accrue Tim. Oops. Not time. Okay. General Journal, page 25 for $750. So in this case, we have a total salaries and wages payable to be $1,250. Okay. And then expenses here. Let me go ahead and put one more line in here. Okay. 630. And we're going to accrue for Tim. And it was for $750. So therefore, grand total should be $3,550. Okay. $3,550. So again, look at that. All right. So let's see what is next. Last thing we have to do is accrue for Albert's commissions as well, and then we can complete our adjusted trial balance. So, let's take a look at Albert's commissions. So go to the commissions sheet. I'm going to go ahead and break this part off here. Well, actually, you don't have to because we're going to have to be using a new sheet for July anyways, right?
Right.
So in this case here, we know that so far he's earned $1,087.09 for the month of June. So he did very well this week.
Mm-hmm.
Okay. $1,087.09. So I got to put that into commissions expense, right? Because I have to accrue the commissions for $1,087.09. 10879. And am I paying him now? Am I
No.
No. So therefore I owe him this amount, right? So I'm going to
Right.
be looking at commissions payable. So commissions payable, right? 2420. Because I owe him for the month of June. Okay? Okay? And it's going to be to accrue for Albert's commissions for June. Okay. Now, what happens when I need to pay my employees, right? So let's say, fast forward, it's now June 12th when you need to pay them, right?
Right.
You're gonna do the as usual, the salaries and wages expense for the remainder of the week, for the week of July. And then you're going to go ahead and counter your salaries and wages payable, right? Because you're gonna take the money that you owe. You don't owe it anymore because you're gonna pay for both June and July. And then you're gonna list out all of the amounts of taxes that you have to pay. So that's what you have to do next for the next accounting period. Okay? So just a little heads up there on what do you do when you have that liability there. So now that we reach the end of my accounting period here, I am going to I'm going to save this. Okay? And now that you're done with your payroll, you can now eliminate your payroll. Or you can now close your payroll, okay? Because you don't need it anymore. But in this case, I believe I won't be needing my subsidiary ledger anymore, okay? Because I am pretty much done. Okay, and this is the adjusted trial balance. Okay, so file save. So again, all you will be needing is just your ledger account. So your subsidiary ledger is completely done. We're not going to involve any more, any other people in here. Okay? We're done with the accounts receivable. We're done with the accounts payable. And we're done with the employees. So you can save this and you can close it because, again, I don't need it for the rest of the steps of the accounting cycle, right? I do my adjusted trial balance. I do my financial statements. I close my books and do my post-closing trial balance. You won't need any of these. Okay? All you need now is just your journal, your ledger, and you can also close out your depreciation tables too. You're done with that as well. So that's all you need. You just need your journal, your ledger, and your financial forms. Okay. Now your ledger is going to be the most important for your adjusted trial balance. So that's what you will need primarily. If you have found a mistake or made a mistake, then you're going to have to adjust it accordingly or see if you accidentally copied something wrong in your from your journal to your ledger. But in this case, we're going to go ahead and we're going to make a copy of my adjusted trial balance, just like what we did unadjusted trial balance, like we did many times before. So I'm going to delete my adjusted trial balance, and I'm going to click delete. And what I'm going to do is I'm going to make a copy of my unadjusted trial balance. Okay, so I'm going to move or make a copy, and I want it above my income statement. Make sure you click on make that copy and click OK. So there it is. And I'm going to make changes to this because it's the adjusted trial balance now, not the unadjusted trial balance, right? This happens after you've made your adjustment entries. So I'm going to fix a little titles here, such as this one right here. This should be adjusted trial balance. Okay. All right. And everything's intact. So remember from the lesson, right? We made everything, all the main accounts in blue, right?
Okay.
So now everything that we added to all of our adjustments, we're going to add them in one at a time and adjust the accounts that we need to add at the same time. Okay? So, yes. So let's go through the bank one more time. Go to your assets, starting from the very top here, right? Let's see. How much money do I have in my bank account as of June 30th? Right?
$10,502.
And 39 cents. Okay, so there you go. I adjusted my little section up here. Okay. Let's see. Petty cash is still the same at 500. Your cash and register is still 310. Okay. So then now my accounts receivable is still at 1531.95. However, I have a contra account, so I'm going to add an account right in between. Okay, so right above, I'm going to click on the number for business supplies, and I'm going to add a new account, and this is going to be for the allowance for doubtful. Okay. Now we know this is a contra account, right? It's a contra to the main account. However, on a debit and credit system, right, we view this as a credit, right?
Right.
But to a main account, what it does is it reduces the main account. So that's where this formula, right? We know that this credit is for $76.60, right? What you have to do here is because it's a contra account, this formula is going to be your total account receivable minus out that allowance for doubtful accounts. So your fair market value or your current account balance for your account receivable should reflect 1455.35, right? Because the contra account decreases the main account. Okay? Even though you technically can't write off the bad debt yet because we haven't encountered a customer who failed on their payment. So in this case, that is why my account receivable is still $1531.95. But what I did here was because I had to make that assumption that 5% of my sales is to be realistically uncollectible. Okay? All right. So next is business supplies, right? We made a lot of adjustments to my business supplies, right? For example, my medium cups, right, is now down to $91.77. My large cups is now 216 and 65 cents. Okay. My sugar is now 21.60. Okay. And my creamer is now 179.63. Now notice this, it changes my formula up here, right? Because I copied my formula into this to say my total business supplies is all four of these combined. So it's at 179.63. Okay. Next is office supplies, right? We just adjusted my office supplies. So I should have $80 left now. Okay. Next is inventory, right? My regular coffee is still at $20.78. My Supreme coffee is at $133.70. However, I have a new addition to my inventory, right? I did a conversion for my periodic inventory, so now I also have to include my mugs, right? And my mugs was for $385.66. So therefore, I need to redo my formula to include my coffee mugs. So regular coffee, Supreme coffee, and my coffee mugs for that $385.66. And now I have a total of inventory to be $540.14. Okay? Now here's the long part. Every single furniture item, every single fixed asset, you're going to need to insert a cumulative depreciation for them, right? Because we need to look at our our current book value of my fixed assets. So unfortunately, you do have to go ahead and insert every single one of them. And this is definitely going to change the formula because allowance for doubtful accounts, it decreases the main account. I'm sorry, I said allowance for doubtful accounts. Accumulated depreciation decreases the main account. So you're going to have to insert all of these in here and the formula will change for your main account. So in this case, you've got the accumulated depreciation for tables. You got the accumulated depreciation for the counter. You got the accumulated depreciation for the desk. And then you have the accumulated depreciation for the shelves. Okay? So I'm going to list them all out, but remember, these are all contra accounts. So it's going to decrease the furniture account. Okay? So in this case, my for my tables, it was $78.63. Okay. For my depreciation for my counter was $14.21. Okay. My depreciation was $7.84 for my desk. And for my shelves was $6.87. Okay, so this is going to definitely change my formula. Okay, $6.87. Now, this is what I like to do. I like to go ahead and insert my formula like this. Now, there's a way that you could do this. You could do equal sum minus an equal sum. But I usually have a problem with that. It never seems to work for me for some reason. So I just like to go ahead and do one at a time. Now, if it works best for you to add, then subtract every single one, that works too, right? But in this case, I'm going to do it like this, where I'm going to put in my tables, but I'm going to subtract my accumulated depreciation. I'm going to add my counter, but I'm going to subtract my accumulated depreciation. And then I'm going to add my desk, but I'm going to subtract out my accumulated. And I'm going to add my shelves, but subtract out my accumulated. And that should give me a total result of $8,926.20. Right? So if you had it previously at $9,022, right, you could have just added up your entire accumulated and just subtract it out from there. But in this case, I did it like that just so then I can keep in track saying, well, if I added this, I subtracted that instead of counting this, right? Or I could say I'm going to add 4 numbers and subtract 4 numbers, whichever way that you find it best. But in this case, this is my total book value for my furniture. Is after I've depreciated it, I've used my assets, now they're worth $8,926.20. Okay, and of course you could double click on it just to confirm that all the all the numbers are selected. Okay, and I have to do that for every single fixed asset. So that means the next one is going to be for my computer, for my printer, and for my register. Okay. Okay. So, again, what was the accumulated depreciation on my computer? It was for $61.16. 61.16. For my printer, it was $12.63. And then for my register, it was $21.65. 21.65. Okay, once again, I need to redo my formula here. So right now, the price that I bought my equipment, my office equipment, is $2,863. But in this case, when I include the depreciation, it should be now at $2,767. Okay. Okay. So then now you got to do your equipment for the brewer, grinder, and refrigerator. So brewer, grinder, and refrigerator. Okay. Acum depreciation for brewer. Acum depreciation for grinder. And then Acum depreciation for the fridge. So let's see. For my brewers, it was $96.20. $96.20. Okay. For my grinder, it was $69.09. And then for my refrigerator, it was $29.13. Okay. And then I'm going to update my equipment account. Right, so I'm going to add all my fixed assets up and subtract all my accumulated, and I should have now $11,951. Okay. So next one is vehicles. So vehicles, right, I have to put the accumulated depreciation here. So I'm going to go ahead and insert that right here. Right? And here, since my truck was 25767, what's going to happen is I'm going to change my vehicles amount, right? It's going to be my 32 minus my 257, and that should give you 31,951. Okay, so let me double check that. That's 25767. Okay. All right, next is prepaid accounts, which is still at 66517. My deposit is still at 1700. Goodwill is still 2100, but I have an amortization for my goodwill. So I need to include that here. And accum depreciation goodwill. Oh, accumulated amortization goodwill. So that's going to make a change to your goodwill account, right, by $11.67, I believe. Yep, $11.67. So that means my goodwill, right, is no longer $2,100 minus the $11.67 should give you a current book value of 208833. Okay? And then again, no miscellaneous suspense. So doing good so far. So now my liabilities, right? I did make some changes, right? I made some adjustments to my accounts payable account. My accounts payable is 6,000 is 6,000 $6,169.47. Okay. Visa payable, if you remember, we cleared the whole amount out. So right now, my Visa payable is 0. Okay. My notes payable is still at $4,144.83, right? I haven't received a bill at all for the payments of them yet. Let's see. I need to add to my payroll liabilities, right? Because I just inserted 2 new accounts in there. My salaries and wages payable and my commissions payable. So salaries and wages payable and commissions payable. Okay? So again, since they're blue, I need to change that color to black because they're sub-accounts. Okay? And let's see. For my salaries and wages payable, it's currently at $12.50. Okay? And my commissions. Oh, did I not do commissions? Did I not update my commissions payable for, what was it? My commissions payable was for 108709. 108709. Albert's sales for June. Okay, wait, accrue. I'm just gonna put accrue Albert. $25 for that $1,087. $1,087.09. Okay, so I forgot to add that in there. Okay, 1,087.09. Okay, so that means for my commissions expense, I need to add that in there. Okay, but I'll just do that along the way when I go through my trial balance. Okay, so commissions payable, you have your 1087.09.
Okay, what about the previous amount he had? $586.
This is payable. I never owed him to begin with. On the
Okay.
expense account, you will see it.
All right.
Okay, so make sure that you re-change this formula because this formula does not include the salaries and wages payable or the commissions payable. One, two, three, four. So the FITW, the Social Security, Medicare, FICA, FUTA, SUTA, and workers' comp. Okay, so that's a total of $31,503.03. Okay, and of course, let's go ahead and confirm that the rest of the information has not changed. Okay, such as your federal income tax withholdings is still 22576. Your FICA, or sorry, your Social Security is 142. Your Social Security is 33.35. Your FICA is 175.95. Your FUTA is 138. Your SUTA is 69, and your workers' comp is $31.28. So all of those are still the same. Okay. So let's see what's next. Okay. Next is all of these utilities payable, none there. Unearned revenue, nothing there. Sales tax payable is still at $2,046.11. Okay. Here you have interest payable. So I have to add that in there. Sales tax payable. So right between loans and sales tax payable is going to be interest payable. Right? How much interest do we owe for the month?
105.
Right now it says 105 and how many cents?
It looks like 40 cents.
Yep, 40 cents. 105.40. Okay, so interest payable is currently at 105.40. Okay. Let's see what's next. Loans. You got business loans? No, but here we end up reducing my truck loan, right? Because we received a bill and we assume that we're going to pay off that amount. So now my loan is now $28,445.14. Okay, 28,445.14. Okay. So next is my equity. right? Equity is still 30,000. No capital contributions, but owner's draw is still 3,000 and no income summary yet. Revenues, right? Let's see. Did my sales change? Let's see. Sales for regular coffee is still at 1304. Supreme coffee is still at 1436. Ceramic coffee mugs is still at 1763. My medium regular is still at 5,221. Large regular is still at 6,503. Medium supreme is still at 6,65577, and my large supreme is still at 7,524. So yes, my sales has not changed. Sales returns and allowances is still 1996. Sales discount is still at 1979. Then we got delivery income for $300. So that's all the same. And interest income. So all of those are the same. Cost of goods sold. Okay. Let's see. So we got a cost of goods sold for regular coffee is still $14.06. Okay. We have cost of goods sold for my Supreme coffee to be $14.86. And then we had our periodic inventory conversion, so we need to include the cost of goods sold for the mugs. So insert cost of goods sold for the mugs, okay, which was a total of $1,182.43. So therefore, you need to change your formula to include that cost of goods sold for those mugs. Okay? For a total of $4,075.07. Okay? Right? Don't forget, we have cost of material. So therefore, we need to insert the cost of material. So, insert cost of materials main account, cost of materials for the medium cups, cost of materials for the large cups, cost of materials for the sugar, and cost of materials for the creamer. So this one's going to be the main account. Cost of materials. Okay, and then we got cost of materials for medium cups, cost of materials for large cups, cost of materials for sugar, and cost of materials for creamer. So in this case, this one, we gotta change this to that blue color. Okay? And this is going to be an equal sum of the cost of materials for the medium, large, sugar, and creamer. So in this case, let's go through it one at a time. The medium coffee cups is $287.10. 287.10. Okay. Cost for the large cups was $351.68. So 35168. Okay. Cost of the sugar was $43.20. Okay. And then the cost of the creamer was $25926. 25926. No, 359. 35926. Okay, 35926. Okay. So that means the total cost of materials was $1,041.24. Okay. Last but not least is the operating expenses here. Operating expenses. So the very first one here is your advertising expense. Still there. Okay, for $185. We just encountered bank fees for $100, so I gotta insert that in there. For $100. Okay. We encountered business expenses, right? We paid for the party supplies. So that was $1282.78. Okay, $1282.78. Okay. Freight expense is 0 now because we did our conversion entry, so we don't have any freight expenses. Okay. Next one is insurance expense, still at $395. Next is interest expense, so I need to include that now. Interest expense. Okay. Interest expense is currently at $105.40, right? Labor expense, so we have still $18.90 for the subcontractor expense and $360 for my temporary labor expense. License and permit is still at $375. Loss on disposal still $2,000. And then office supplies expense, so before payroll, office supplies expense, right, which was for $70. Okay. Then we have payroll expenses, so starting with salaries and wages payable, or sorry, expense. We currently have $3,550. Okay. Commissions expense. We need to add that accrued commissions for Albert. So accrue Albert's accrue for Albert on the 25th. For that was at 1,087.09. Let's double check my journal for that. 1,087.09. Okay. 1,087.09, which is going to give me a grand total of 1647.75. Okay. 1647.75. Okay. We haven't incurred any payroll taxes because we're not paying our employees yet. Okay. Next one we have here is purchase expense for 0, right? Because we did our conversion entry. So it's zeroed out for my purchase expense. It is also zeroed out for my purchase returns and allowances. And we also have a 0 out for my purchase discounts. Okay? Right, we're reaching the bottom. All right. Next we have here is my rent is still for $1,500. Okay. My travel expenses is still $271.07. Okay, utilities expense, nothing there. I gotta do my bad debt expense. So I gotta insert 3 more rows here for my bad debt expense. So insert 1, 2, and 3 for my bad debt expense. Okay, my bad debt expense is currently for $76.60. Okay, and my depreciation expense is currently for $655.08. Okay, and last but not least, my amortization expense. I'm going to put amort for $11.67. So do I pan out evenly? Please, please, please. Yes, I did. Yes, success. We are at 1,004,864.46 for the main accounts, right? And of course, the sub accounts are all the other the black numbers, because those are debits and credits, right? The main accounts include them combined. That's why they won't be the same number. But in this case, make sure, right? My debits and credits is 105,607.82. And success, we panned out on each side, right? Because I put my formula here just to ensure that we have the debits minus the credit. So in this case, I am done with my adjusted trial balance, and that's my adjusted trial balance. So go ahead and save that. Okay. And what we're going to do real quick is we'll spend the next 15 to 20 minutes completing our financial statement. So we are completely done with the adjusted trial balance. So I'm going to go ahead and save everything. Okay.